Hi, welcome to our weekly Forex forecast. My name is Jay Norris. As always, we need to remind you that trading Forex is a risky endeavor and not suitable for all investors. I've written a couple of books on trading which were published by McGraw-Hill, which serve as the textbooks for our courses, and I'm also the Director of Education at Trading University. Here's our site. First market we're going to cover will be the Australian US dollar. Australian US dollar continues to look good. In fact, it looks like you're on the verge of a breakout here on the daily chart. And I suppose if you have that breakout on a Friday, that would mean that weekly chart is breaking out also. And this is something that we had talked about, almost anticipated too. These higher prices, we think you're going to take out those summer highs and you're going to challenge the 2012 highs up around 108. So we see continued strong trade ahead for this market. Awful hard to turn this market around right now, particularly this time of the year. You have a pretty powerful seasonal. So it being late in the year, it being coming up on the holidays, it'll be pretty difficult to try to turn this thing around. So we think that the cat's out of the bag, so to speak, over the near term for the Australian dollar. We're pretty bulled up on this pair. Aussie yen also, we're pretty bulled up on. So many of the yen pairs, and we'll cover dollar yen too. But here's another guy where we think 90 near term, and that's not that far away. We've been saying that for a month now, longer than that, and we're a lot closer to it than we were just last week. But we think there's plenty of more room upside here in Aussie yen too. Back to the majors. Let's look at the euro, and here's another one where we kind of anticipated the strong euro, and you see what happened over the last week. Boom, 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 5 days in a row. A pretty powerful move, and look how you closed. Very strong. That's going back, that's a 6.5, 7 month high settlement. And it opens the door to the next level, which roughly 135 even we'd be looking at. Keep in mind that long-term pattern, that primary pattern is still down. But as we've said the last couple of weeks, it's tough to buck that day to day when it's aligned with the secondary. A secondary pattern for us can be as long as 8 months. This can go on for a while now. Given that you're about 5 months into a secondary pattern, that's kind of long in the tooth. But it can go from 5 to 8 months, that secondary pattern. So it wouldn't surprise me if you get just a little bit higher here and you start going sideways and kind of do that slow grind higher also. I thought it may have been a big run on stops, and maybe they just haven't gotten into them yet. It looks like they didn't quite get to the high. That's not that surprising. I don't think professionals want to get into those stops just yet on a Friday. But if you get into them early in the week, it could be a long week for anyone left short this market. That's for sure. So we still think there's some more upside in the euro now. Overall, we think, though, that longer-term traders would best be served selling a rally here. But you have to be cautious and let that rally play out. So looking good, essentially on all time frames in the euro. Looking good, certainly short-term, intermediate-term, even long-term. There's some room up above between where it's at now and 135. Hey, let's look at the pound. Same story. Well, I was hoping for a big dip in that pound. Well, I guess we may still get it. Another tough market where here it's even more powerful. You see the primary, secondary, day-to-day all aligned. So this is a guy where you're definitely going to be interested in buying any dips going forward. The problem is, when will you get those dips, though? I don't know. This is a very strong market. It seemed to me you have more upside than downside. Here's the weekly. We think 170's in the cards. We think that you'll get to the top of the 08 highs here. I'm sorry, the 09 highs. So we think that'll be in the cards. So we're definitely interested in keeping an eye on pound dollar for any dips to get long inside that, in line with that pattern. Boy, when you see the day-to-day, the secondary, and the primary up, that's definitely not a market you want to get caught short in. Let's cover dollar yen here. Very strong market. You see it finally took a break. You got up to the May highs there. Boy, that's quite a boost there, quite a move. So I guess it's time to take a little bit of a rally. You still have a powerful seasonal up in this market. even into January too. Really, that's the best time of the year to be long dollar yen from a seasonal perspective. You look back 35 years or so, best time to be long dollar yen, i.e., short the the yen itself. It actually January, so pretty good seasonal for this market. So we would look for continued upside. Maybe one where hopefully you get a little breather here and it gives us a dip to buy, but definitely we're still bulled up on here, and you can see why long term. Here's the weekly. Look at that massive bottom formation, and there's just so much room on the upside. And dollar yen has been the story in the currency markets the last couple of months. We think it's going to continue to be the story. Same thing with all the yen pairs. There's just so much room on the upside. And here you see CAD yen too. And here's another market that, that's a big breakout in this market and a lot of room on the upside. So we're pretty excited about the yen pairs. There's always a bull market somewhere, as they say on Wall Street, and you are looking at the bull market here in the yen pairs. Last market, we'll take a look at the U.S. stock market. Market taking a little bit of a breather, had a pretty good correction late in the week there, and I think that's normal with the situation in the U.S. You come up on year end. You're going to have some big tax changes coming up, obviously, with the tax changes they're working on now, i.e. the fiscal cliff. So it's natural that people would be taking profits in the stock market. And it's natural they would be locking profits in the stock market. Also, late in the year has been a pretty good year for stocks. So not that surprised that you're seeing a little bit of weakness. I tell you what, as long as there's strength in the yen pairs, this market's going to be worth taking a look at buying dips for it, because now that the Japanese are starting to come out of the shell that they've been in for the past 5 years, now that they're starting to deploy money overseas, i.e. buying companies, buying shares again globally, that's a good thing overall. That'll do it for us. As always, thank you so much. We like seeing you. And if you want to know more about our courses, you can go to our website, trading-u.com. You can click on Market Commentary and find this video or other articles we've written about the program. Good to see you guys, and happy holidays to everybody.